Happy Monday and good morning from Chicago traders. It is Monday, the 31st of July, 2023. This is episode number 2513. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, a couple of announcements. I want to let you know that starting on Wednesday afternoon, I'm basically going to be on vacation. I'll be taking off Wednesday afternoon, and I will not be back through August 11th. So from the 3rd through the 11th, there will not be a trader bite, and I will not be around. I will not be participating at all in the markets. It's that time of year. And I have to be honest with you, it's much needed. I'm still struggling with some health issues and feel absolutely drained, so I could use the time off. In addition to that, I want to remind you that today is the last day for the summer sale at Convergent Trading. To take advantage of that, point your browser to go to ct.pro/summer20. This is, again, coming to an end here today. Okay, let's get down to business here. Let's take a look at the Convergent Trading pre-market summary sheet this morning. The market's posture is tilted slightly to the positive side. Really, it's mixed. Currently, the S&P is hovering around Friday's high. The NASDAQ is doing the same. We see that across the board. Given that Friday was an inside day to Thursday, we have some interesting potential setups here. One other thing I want to point you to on the sheet is it is Monday, so the rotations have been updated for the week. You want to take note of these. Again, the overall picture is that the rotations are collapsing slightly to holding steady. Things are kind of slow right now, as we would expect at this time of the summer. Pre-market, we had Panasonic, Mitsubishi Electric, and Lowe's. After the close, we have Tenet Healthcare, and several others. I'm not going to name each one of them, but this week's got a few big ones. We do have Merck tomorrow, Pfizer, AMD, HSBC, Caterpillar, BP, Starbucks, Uber. These are all coming through tomorrow. Deutsche Post, Marathon Petroleum, Enterprise, and then on AIG's in there as well, AIG and Cisco. And then on Wednesday, we have Qualcomm, CVS Health, PayPal, and many others, Humana, McKesson, Phillips 66, MetLife, and so on. That's Wednesday. Thursday, we've got Apple, Amazon, ConocoPhillips, Amgen, Airbnb. What are some big ones here? Cigna Health, BMW announces, Merck announces, AXA out of France, and several others on Thursday. So, and then Friday, it looks like it's pretty dry. Friday hasn't got much in it. So again, earnings continue to be front of the line here in terms of attention. The Reserve Bank of Australia has interest rate decision tomorrow morning. BOE interest rate decision Thursday. Amazon and Apple earnings Thursday after the close. U.S. job reports Friday. The report is Friday. Those are some of the key pieces. This morning we had a GDP growth out of the EU, came in at 0.6 versus 0.5. That's the growth rate year-on-year flash for Q2. The inflation rate out of the Eurozone year-on-year flash came in at 5.3%, in line with expectations. The prior is 5.5. This evening, we get the Kaiken manufacturing PMI. The PMI numbers out of China continue to be weak, and there's higher and higher, more and more fear of stagnation there. Again, the RBA tomorrow, and then ISM manufacturing in the U.S. Manufacturing PMI at 10 o'clock tomorrow. Wednesday, balance trade out of Australia, balance trade out of Germany on Thursday. Again, the BOE rate decision, and then the U.S. has ISM services PMI on Thursday at 10. And then on Friday, non-farm payrolls and unemployment numbers. Those are the key figures for the week. The calendar isn't too bad. Tuesday also has the JOLTS job openings, which isn't as important as it was over the last couple of years. That's what's on deck for today. We have Fed's Goolsbee speaking at 9:20 here in about 14 minutes. We have Chicago PMI at 9:45, comes out to private holders at 9:42. And then we push to the Cakegen manufacturing PMI this evening. The S&P multi-distribution profile this morning, the pretty active price discovery. 176,000 contracts traded. The inventory is 20% long, pretty balanced, and then the range is 23.5 points. Point of controls holding pretty high up at 46.14. Okay, here's what's on deck in terms of the big picture. This is the S&P. This is a market profile chart with a volume profile behind it, and you can see that Friday fairly well distributed profile. You can see the volume profile is pretty much balanced. The volume point of control is on top of settlement on Friday, and then Friday was inside of Thursday's wide range. And this today, what we're doing is we are, and most of Friday traded inside of that balance range that's drawn here. This is the balance range for the S&P right now, and it held that balance range most of the session on Friday. And then this morning we're trading on the upper side. We actually pushed above Friday's high by a little bit and have come back in. We've been squeezing higher. So we have an inside day that's breaking to the upside, and then this big selling day here, this bearish engulfing day with like a pretty minor excess at the top, pretty poor structure in the middle, and then finishing at the low end of the range here, just totally engulfing almost the entire balance range. We took that back on Friday and we're breaking to the upside, and this is basically likely to squeeze some shorts. So to me, the key element this morning is any test down is going to be watched very closely, as it's likely to be refuted. My expectation is that any push lower into Friday's value around 1250 or 4610 or so is likely to be refuted, and then we're expecting it to make a run to 25 first, 25 being one key price, and then above there the yearly high 33.50. So overall, the expectation is we're likely to drift up, barring any news or any additional input. The market's very likely to drift higher. If it does open and balances out and pushes back into the range, is unable to hold the 12 and the 10, then it's gap to settle trade. And then from there, really you have 4,600, and it's just very, very likely to be a choppy trade to the downside. That's how things are looking. There's a huge bear position in the market. You know, the market's been pricing in these interest rates, slowing things down, making earnings a little bit tougher, and therefore prices on equities have been expected to drop into the second half of the year. We're in the second half of the year here, and the market's just hanging on pretty tight. The job market continues to be tight. People do have money to spend, and therefore the impact is not being felt. So that we've been seeing a squeeze to the upside, and today's positioning kind of confirms that in my opinion. Looking at the NASDAQ, I'm going to keep today's very short. Again, I'm not feeling incredibly well today. So I'm just going to dive right into the expectations. The NASDAQ, if you recall, the equivalent S&P was down here for the high. The NASDAQ took back most of Friday's or Thursday's upper range and built balance on top of that. The NASDAQ has some pretty good fuel to now start to push into that 15,980 area. It's 980 right here. It's a naked point of control. I'm just rounding. And then the 16,000. The NASDAQ on a relative basis is weaker, right? So the equivalent, remember the S&P on this day here made new highs of the year and then went across the entire bounce range to poke below and then close inside of the bottom end of the bounce range. Whereas the NASDAQ wasn't anywhere close last Thursday to the high of the year, and it's holding the upper end of the range, and it basically retested the high on Friday, came close to retesting the high on Thursday, and to me this looks like it's primed to push higher. So we have balance on Thursday, both in volume and in TPOs, and as long as it holds above this settlement price, it is likely to squeeze higher as far as I can tell. The opposite play, of course, if it does get below this 15,775 area or so, this single TPO, if it pushes down below here, this could be very fast to the downside. There's very poor structure in the NASDAQ all the way down to Thursday's close, and it could push pretty fast. So pay attention. If it sticks around and starts pushing the lower end of the range, I would not fade a move into that thin part of the profile. Let's stretch this out. So right down here, you see these single prints that are acting as an excess low at 773. As you know, if it gets down in here, it is very likely to just fall right through that zone if it pushes through on the NASDAQ. Looking at crude has been quite surprising. Crude, it just maintained better than expected, maintained the 80 challenge, the 80 on last Thursday, pulled back a little bit. Crude came in, opened, pushed down on Thursday early on, and then ended up extending both ways and finishing quite strong. And now we have a gap in crude, and it's pushing higher into the 81 handle. Crude's a lot stronger than expected here. The expectation as of last week's structure is that it is likely to put in a rounded top and then start challenging these lows by taking out the prior session's low. You could see on Friday got within 4 cents of challenging that low and ending the one-time framing up, and then it held and turned all the way around to finish pretty strong. And now we have a gap up in crude. So crude, don't have a very good read on it currently. There's some fundamental thing going on with crude that I'm not aware of, because the technical side was starting to show that the point of control migration was stalling out. Price action was still higher high, higher low, but only by a little bit, and value wasn't moving higher. So to me, the bet was on Friday that crude is very likely to come down and challenge the prior low. Not rotate yet, but challenge the prior low. And if it does, the 77 is the target for crude to the downside. Okay. Again, I want to remind you that starting on Thursday, and for the following week, I will not be around. I'll be off. I'll be on vacation. And then also a reminder that the sale at Convergent Trading for the summer comes to an end today. If you want to explore that, point your browser to go to ct.pro/summer20. Good luck.